Well, let's first go step back a little bit. So we identified a top reversal last week when we were here. We were like, is this top reversal actually, at that high close? We hadn't yet got it confirmed. It didn't confirm until Tuesday, right? Tuesday we got our end of day arrow that said, yeah, that October 28th close that was so high was the top. So, okay, great. Now we're starting to ask ourselves where the bottom is going to be. And this trend that we're in, it isn't yet mature, right? In fact, the one before that ended without it being mature, right? And when we say mature, what we're talking about is we need two tests of support and two tests of resistance for it to be considered mature, right? In order to draw a line of support, you need to have a start and a finish, two tests, right? And in order to draw a line of resistance, you need to have at least 2 points, a start and a finish. So until you have two tests of both, we don't call a trend mature. So this guy over here that we had identified when there was a trend change never got a chance to be mature before we got signaled for a new trend change. It would be interesting if we got yet another trend change, which could occur before this matures. Because if you start getting trend changes over and over again very quickly without each trend getting a chance to mature, that is the definition of a sideways choppy market. That is the definition of you need to be getting out of your directional trades and into premium trades. I had so many people all throughout the summer and fall say, "Oh, AJ, I'm not doing premium trades anymore because the market is so directional. It just makes sense." Well, I hope you've dusted off your premium strategies because it looks like we're in with the high VIX and with these sideways choppy markets. It looks like we're in some premium trading territory. Let me bring up for you while I'm doing that. I'm going to bring up my rainbow graph here. Okay, so when we got our new trend, our first move starting on October 10 and just ending on October 28th was what we call an ideal uptrend move, right? See how it went into that green zone SIP?
Very much
Now,
so in the green zone.
very much in well, that's considered an ideal uptrend move. Now, an ideal uptrend move when you have a little bit of a pullback, and we call that range contraction, would be into this purple or magenta zone, right? And as of yesterday's close, that's where we were ending up. However, as of today, and of course today's not over, anything can happen. We can see the bulls come back this afternoon and bring us back into the magenta zone. But as of right now, this pullback is bringing us into this red zone. So I want everybody to write down $6,680. I'm rounding my threshold down. If we wind up getting a close below $6,680, that reinforces the sideways choppy theory versus the uptrending theory. So getting into this red zone means that we're our market is changing its personality from being an ideal uptrend to now being more of sideways chop. And again, that means that a lot of your directional trades, if you're in bull directional trades, are under pressure, right? You might want to be thinking about trailing stops or even just closing them out at profit targets and thinking about sideways choppy strategies. We're talking my premium selling strategies. We're talking about vertical spreads. We're talking about iron condors or condors in general, double butterflies, all those great option strategies that profit on sideways chop. Now, can I go on with some other thresholds? Do we have a minute?
We certainly do.
Okay, I'm watching very carefully this 6,550 level. So that would be a full retracement. That would mean getting below this previous move. That would be that scenario that I talked about, which is a trend change before the previous trend got a chance to mature. That means we would have had 2 trend changes without any of them ever maturing. Again, sideways chop. All arrows seem to be pointing at sideways chop. So I'm watching that 6,550 level, and the how we've declined in just the last week and a half. 6,550 is not actually that far away. It's 90 points away from where we currently are. And then the last zone I have for you, Sip, is down here at 6,470. If we start to trade down before we find a bottom reversal below 6,470, this is my stretch target. If we get below 6,470, it means that that's an ideal downtrending move, and we actually need to start looking at the fact that maybe that bubble is starting to let out steam. Maybe we're thinking about some bust. We're talking about trend reversals. So that's pretty far away from where we are right now, but it isn't off the table. So I want people to pay attention to those 3 levels: 6,680, 6,550, 6,470.